Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show. In studio today with my very special guest, Mark Chaikin. He is the man who invented the Chaikin money flow indicator, basically telling us where the money is flowing today. His work is featured on every terminal of Reuters, of Bloomberg, followed by over 1 million people worldwide. And he has multiple wins and is here to tell us today there's still room for wins in today's stock market. So nice to be back with you, Mark. How have you been?
Danny, it's good to be with you. Just great. Just got back from Italy, so I'm relaxed and happy.
Well, who isn't relaxed when they come back from Italy? And I'm excited to talk to you today because you're very bullish on the market, right? Because last time we spoke, you've had a change of heart here.
I did. In mid-January, we had a momentum breakout in terms of advancing stocks versus declining stocks. And historically, that's been a signal that the bear market is over. So we've been bullish since mid-January with a particular focus on tech stocks.
Now let's talk tech stocks because often I hear, but Mark, they're too expensive. People are wary of entering this sector, but you say not so?
Not so at all. And what we're looking at is not just the mega cap stocks like Amazon and Google and the stocks that really led the bull market in 2021. We're looking at software and semiconductors. And from NVIDIA to Adobe to AMD, there's so many opportunities here, especially as the market starts to pull back from recent highs.
Yeah, you were telling me offline, you mentioned semiconductors, you really like the semiconductors, you think they're cheap here.
I am, and what the difference is AI. So semiconductors are cyclical, as you know, and so they go up and down with the economy typically, but this AI revolution, and I really believe in it, is a game changer for semiconductors.
Okay, this is fascinating to me because, again, there's fear of AI, of how it will change our world, but could it be the savior of the stock market?
I think so, in the same way that the internet was a productivity tool that started in the mid-90s and drove a huge bull market, and to this day, obviously the internet is a great productivity game changer. Same way AI, I'm not as concerned about the loss of jobs. I think there's going to be a pickup in jobs for people who are very conversant in AI.
I was actually at a fascinating conference last week that Joel Littman, our colleague at Stansberry, invited me to. Ernst & Young hosted it. And they were saying one of the biggest misconceptions in mainstream media is to believe that there will be a loss of jobs or there's not going to be a need for humans working due to AI.
Do you really believe that?
I don't. I
don't either.
Yeah.
I mean, going back as far as the buggy whip, when the automobile came on board, a lot of people lost their jobs who made buggy whips and other things associated with non-automobile transportation. So innovation is unbelievable, and we've just got to buy into it.
So talk to me about the Chaikin money flow indicator, right? Can you give me examples of when this gauge just knew exactly what was going to happen to a stock and is able to allow you to have insights of which sectors will be wins here?
So let's separate the power gauge from Chaikin money flow, which is one of the 20 factors in the power gauge rating. It's a quant rating and it's fundamental. Chaikin money flow tells you what the big money is doing. So as an example, the power gauge turned bullish on NVIDIA back in November. Imagine. And AMD and Fortinet, all these tech-related stocks that people were shying away from because they had been in some serious bear markets. So the 20-factor model turned bullish, and smart money has just continued to buy since November. That's the ideal combination. It's combustible. It can light up a stock going forward.
Is there another example you can name? So you named NVIDIA.
Well, I'm going to go away from tech because it's not just tech. Generac, one of our recent recommendations, symbol is GNRC. They make backup power supplies. Power gauge turned bullish about a month and a half ago. This is a stock that's down from 520 to 130. Think about that.
Wow.
It was a darling of the stay-at-home people. With all the severe weather we're having in America, we've had a lot of blackouts. This is a company with a great long-term future. Everybody's looking at Tesla as a power play, right? It's the electric batteries that really is the juice behind, well, no pun intended, behind Tesla. Same thing with Generac. If you own a home and you're in an area that's had extreme weather, you have to have a backup generator. It saved our bacon 10 times since we moved to Connecticut 3 years ago.
Sometimes does it surprise you, Mark, if you put in a ticker and it tells you, this is a buy? Are you like, wait, could it really be?
Indeed. I mean, that happened during the COVID crash when we got buy signals on Overstock and Wayfair. I'm sitting there in Connecticut thinking, how do these shopping stocks, online shopping stocks, do well, in a COVID lockdown? Well, it turns out people were buying porch furniture,
right,
and enhancing their home offices. So, yeah, it does surprise me.
How long did it take you to develop that system?
Well, the system is based on working with smart money institutional investors over a 30-year period. So I had an institutional brokerage firm in the late 80s into the mid 90s. And I had clients like Paul Tudor Jones, Steve Cohen from SAC Capital, George Soros. And what I did was, but we also had value investors and growth investors up in Boston. So I was selling them the Chaikin money flow oscillator. And in order to help them incorporate it into their methodology, I had to learn what they did. In other words, how did they view the stock market? And it turns out they all view it differently. Different factors, different time horizons. And so when I built the power gauge rating, which actually happened after the great financial crisis in '08, I came out of retirement and I said, well, let me draw on everything I've learned from these very smart investors, people like Peter Lynch at Magellan, and the hedge fund guys. And so I zeroed in on 20 factors that I knew smart money looked at before they made decisions. The key is they don't all look at the same factors. And so we have an eclectic model. It's like a great stew. It's like a bouillabaisse.
Yeah, I love it.
And that really, and it'll come up with surprising names.
And it's simple to use for the investor. Like I'm simply just putting in a ticker.
You're putting in a ticker and you see a gauge that goes from very bearish to very bullish. So for instance, right now, energy and the banks are still in the bearish camp. But tech, software, industrials, bullish and have been for 3 or 4 months. That's the key. It's not a Johnny-come-lately kind of thing.
Talking about that, let's talk yield discussion. Is now a good time for dividend stocks, especially for retirees?
Well, retirees are always looking for income. I don't favor the defensive stocks right now, like utilities, even the pharmaceuticals. Why? Because they don't have bullish power gauge ratings in the main. There's a couple of exceptions like a Kimberly-Clark, but this is the time to, there's an expression, make hay when the sun shines. This is a time to be in growth stocks, quality stocks, where there's huge upside potential as the bull market unfolds.
I need to go put in some mining stocks. I'm so curious now.
Well, commercial metals,
yeah.
Bullish power gauge rating just reported recently, much better than expected earnings. Stock popped 5% on the earnings report. So commercial metals is an interesting name in the power gauge.
Super interesting. Now let's layer on top of all of this the Fed. Jerome Powell coming out this week, Mark, saying, "Hey, we're still hawkish here. Expect more rate increase just because we took a pause. There's a long fight ahead." Versus inflation. Your take on the latest from Powell here?
Well, I think Powell has 2 jobs to do. One of them is to keep the animal spirits from, getting out of hand, which is where
the animal spirits.
Yeah,
yes.
because so he's jawboning the market. What he's hoping with these comments before Congress is, okay, the market will take a pause here, so it puts less pressure on the Fed to dampen things. But the reality is the market is adjusting to higher interest rates. I don't think they'll ever get inflation down to 2% in the next 5 years. So I think that's an unrealistic goal. 3% maybe, 3.5%. So the market is telling you by its reaction to these recent interest rate hikes that it's comfortable with higher rates.
So when you hear people say, no, we're going to start printing money again next year, you don't see that happening.
Not unless the economy really goes into the tank. And I think that's the conundrum that the fundamental people have, like Mike Wilson at Morgan Stanley is still looking for 3,000. Come on, this market's not going to 3,000. And I think the economy is a lot stronger than people are giving it credit for. And therefore, I'm not necessarily looking for rates to be cut, but I'm looking for rates to flatten out.
How about recession? Where do you stand on recession? I mean, Goldman Sachs coming out saying expect a mild recession. I mean, My question is, how do we know what kind of recession it's going to be until we're actually in it? But your thoughts on whether we're headed for one?
This is above my pay grade. There's an old expression on Wall Street that if you laid all the economists in the world end to end, they still wouldn't reach a conclusion. Economists are paid to have an opinion. I don't think anybody knows. And plus, it's a different economy. You've got cash cows like Microsoft, Apple, Amazon, Google, and you have manufacturing that may not be as robust, but this is a different economy. It's not your grandmother's economy.
Not your grandmother's economy. And just going back to the Fed a second here, I mean, we see what the BOE did, surprising the market with a 50 basis point hike. Do you think Powell's looking at what's happening over in England? I mean, obviously the inflation levels are not the same. Could we be that hawkish here as well?
I don't think he looks beyond the U.S. economy and what he's got to do, which is get inflation down and keep unemployment as low as possible. I think we're almost in a Goldilocks situation where we're just right, not too hot, not too cold, and this $5 trillion in money market funds.
That's
Where's
right.
that going to go?
Okay, but let me ask you this, Mark. Presidential election, will it throw a curveball?
Well, we're in the year of the presidential election cycle, the pre-election year when the market finishes with a bang. And that's been part of our roadmap going back a year ago. It's why part of the reason I turned bullish in January, even though the Fed hadn't started cutting rates and we're still raising rates. We should finish the year on a big note. I'm on record as saying 5,000 in the S&P is a possibility, which is 15% up from here.
Is there any wild card that concerns you?
There's always a wild card. That's the thing about a wild card. You can't anticipate what it's going to be.
Okay.
But I like to think about what could go right. Like the war,
I like
maybe
it.
the
I
war
like
in
that.
maybe war in Ukraine, ends. Maybe the Fed doesn't raise rates in July, which is now everybody's assumption, and suddenly all this money that's on the sidelines has to find a home.
As a complete segue, I'm curious to get your thoughts on this talk of de-dollarization. And we saw Janet Yellen, for the first time, really hint at the fact, we might see the U.S. dollar lose value against the growing number of countries looking to diversify outside the U.S. dollar. Does a weakening U.S. dollar concern you?
Well, it's negative for the international companies like Caterpillar and maybe Triple M. And in fact, as Europe raises rates, the dollar is weakening. So it's not a concern to me. The dollar is going to do what it's going to do. We've had bull markets with strong dollars. We've had bull markets with weak dollars. It's a question of what you're in. So if the dollar's weak, you want to be in U.S.-centric companies, retailers, right. Companies that are not multinational.
And that's where the power gauge makes it super easy. I mean, I've used it, and I'm still blown away by how easy it is. So, and also you have a new free special report, Mark, right? The rolling crash of 2023.
Yeah, and actually we're on the other side of that.
That's
we
right.
were talking about the rolling crash all through 2022. We had it. Market bottomed out in October when tech stocks bottomed out. We still have a couple of industry groups like energy and banks, financials in bear markets, so they'll eventually bottom out. But now we're looking at a rolling run-up. We're looking at a series of industry groups, one by one, getting stronger. Now aerospace is strong, some of the construction stocks and home builders. So we're in a really dynamic phase.
Huge opportunity to make money on some of these cash cows right here.
Absolutely.
Nice. All right. Well, if you want to learn more, you can go to warning2023.com. You can read Mark's free report and get more insights on his latest takes on this market. Mark, thank you so much for stopping by here in New York City.
Danny, it's amazing how fast a half hour will go. Thank you.
I'm glad. And enjoy your next trip to Italy.
Yeah. Coming up in October.
It speaks to my heart, how you love it so much. Obviously, so do I. So, Mark, enjoy your time there. Come by anytime. And thank you for watching. We'll have more great content coming right up here on the Daniela Cambone Show. Be sure to stay tuned on Stansberry Research. And you can sign up at danielacambone.com to stay on top of it all. That's it for me. Thanks for watching. Thank
Fantastic.
You so much. Yeah.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.